Let's also welcome on board then Sandip Sabharwal, who joins in on the show. Sandeep, hi there, morning. What's your take on Paytm, given the fact that we understand that SoftBank is mulling yet again paring their stake in this counter?
Yes, I think it follows a series of stake sale by foreign investors into the earlier investors into Paytm. Paytm is a company where the promoter holding is almost nothing, and most of the stock still is held by foreign investors. I think over 50%, if I remember rightly, even after these sales. So I think as the uncertainties continue, these sales will keep on happening at periodic intervals and keep the pressure on the stock price.
Okay, that's the take coming in on Paytm, still struggling around that 400 rupee per share mark. Sandeep, stepping into the month of March, seasonality says that, 7 out of 10 times in the past months of March, we've managed to gain. But what's the overall market construct looking like? Is it looking a little top heavy and you think there will be some weakness perhaps in store for us?
Markets have been top heavy for some time, but I think the momentum of flows, especially in the domestic markets, have been so strong that we have not seen the corrective move play out. So possibly it could happen over March and April. But I think there are two things we need to know. That one, I think it will be just a bull market correction, which sometimes tend to be swift and sharp and shake up the people who have been very bullish just on momentum. So that's something which could happen. And secondly, I think post correction things should still be fine because the macro factors are favoring the equity markets longer term. So the bigger, I think, frenzy has been on the small and mid cap side. And that's where on news based, story based, small and mid caps, people need to be careful.
So, would you recommend buying anything in the mid and small caps universe in the next few days, or would you say steer clear of that pocket?
So we have been accumulating on everyday stocks, which we think are down and have things working for them, which could lead to gains going forward, which includes stocks like V-Guard Industries, where I think on the consumer durable side, that's a very credible management and earning growth momentum could pick up going forward. And as a turnaround candidate with renewed management focus, we have been accumulating VIP Industries. On the large cap side, I think uh, things are still okay on the auto sector, stocks like L&T, etc., to buy on dips. And at some stage over the next few weeks, large cap banks also, they are in a reasonable buy zone even now. But I think if the liquidity tightness persists, then there could be some more concerns around them on the margins, etc., which could get better opportunities over the next few weeks also.
Just going through the list of stocks where the price price action has been quite constructive. And Kunal, another one which is above the 200 DMA is Raymond's. Has the stock got its mojo back?
Yeah, Nikunj, I think broadly. So I think the stock corrected from 2100, 2000 plus levels to 1500. In the by the I think by the end of December, from there the stocks had come back towards the 200 moving average retracement. So I remember I think there was a huge divergence, like what we keep on pointing out for many of the stocks when stocks rally up significantly high. So there was a divergence of almost 40-50% from their 200 moving averages that got retraced for Raymond's in a matter of I think 1 or 2 months, and from 1500 odd levels, the stock slowly and steady has gone up above that 1800 mark. Now I believe that when we look at this in the entirety, the last 1 year of rally, the last 3 months of correction, and the recent rally and the pickup for the stock, I think the worst could now be behind the stock price. What I also probably like about the charts for Raymond is that every time you've seen the stock picking up good pace or momentum after a few weeks of consolidation, the volumes have been on the more favorable side. So volumes dip down when the stock consolidates and they immediately pick up whenever the stock is inching or nearing towards a breakout. I think that's a very strong sign which you typically look out for in charts, and I think Raymond fits the bill there perfectly.
Sandeep, I can argue both ways when it comes to hospitals. I mean, this sector has seen a complete change in terms of private sector commitment, P guys coming in, cost efficiencies coming in. But given that there is a PIL in the Supreme Court, where there is a case that now, given where healthcare cost is rising, it really needs to be monitored and checked. If Supreme Court comes with a regulatory or comes up with a regulation in terms of what needs to be the average price for surgeries and other things, could that turn the sector completely around?
It's a clear impediment, especially given the fact that we are now at levels where the hospital stocks have rallied very substantially and trading at valuations of most of them above 50 times, some of them more near 80, 90 times earnings also. So I think when you trade at such valuation, it's priced for perfection. And when perfection doesn't play out, then obviously there could be risk to the stock prices and the corrective moves can be significant. Now, uh, as a counterpoint, there have been several incidents or matters in the past where the Supreme Court gives observations, but ultimately comes out with a judgment which says that they would not like to interfere in such things, and they leave it to the government or any such thing. So I think we don't really know what's going to come out, but uh, obviously there is need of some sort of standardization because this is one segment where people end up spending a lot and they really just don't know when they reach a hospital how much they'll have to spend. Whereas in most other services, you actually know what you'll be spending. So I think something could actually come about. So people need to be careful about this space.
Such a great point that everything is at a record high for hospital stocks.
All right. Meantime, Sandeep, wanted to get in your thoughts on the entire cement space, given that reports are talking about price discounting, increased competitive intensity. What's the road ahead looking like within cement?
Yeah, I think cement sector it could be entering into a tough phase going forward because capacity additions are very rapid. Volume growth has slowed down, like the core data which came out yesterday showed a 5% increase in production. Now, the supply increases are going to be so rapid, and the capex plans announced by most of the companies are so strong that I think pricing power will be completely missing out of the sector at least over the next 12 to 18 months, if not longer. And the only good thing going for them is that input prices, the power prices, fuel prices have been very low, and that's aided their profitability. It could aid the profitability this quarter also, but from next quarter also onward, we could start seeing pressures. So, and the valuations are not cheap given that commodity nature of the sector. So broadly, like across the board, I think this sector remains a word for me at this stage.
Sandeep, we've not discussed Bharti in a while actually. I mean, I could say that this is old wine in the new bottle, that ARPUs they need to go higher. Every businessman will want their pricing power to go higher. But logically, this time looks real because Jio has not resisted anything so far what Bharti has done.
Yeah, so I think the only reason why tariffs have not moved up is because of Jio's reluctance to do that in their quest for market share. Maybe there's a thinking within the Reliance management now that they have got enough of market share, and it's tough for the market share to go away now. And they could also focus on ARPU. But ARPU increases have not been as much as what they should have been. Like the ARPUs in India are really, really low. I think any as compared to not only a developed economy but any emerging economy also. So I think once and in a duopoly, once the players decide that they need to focus on profitability, it's very easy for that to be achieved. So I think that by itself should keep a constructive outlook on Bharti. Bharti has been one of our core holdings for a long time now, and we continue to.
Well, hard to imagine why Vodafone is up 100% in last 1 year, but Bharti surely has gone up by 46% in last 1 year. Sandeep, so what's been your strategy of late? I mean, how are you approaching March, April, May, in the run up to the election? Would you sit on 15-20% cash, look for that volatility and buy on, or it's time to just say fully invested?
On the small and mid cap side of the portfolio allocation, I would say that a 15% kind of cash cushion would be a prudent strategy. On the large cap side, we are more or less fully deployed, because I think that we have to ride out the correction in that space. So I think in that space, I'm not so bothered. But on the small and mid cap side, yes, there could be better opportunities, because the way the indices have moved, the way valuations have expanded, it's been really, really drastic. And some corrective moves out there are imminent at some stage. Now, I had thought that Jan Feb would be the period of correction. They didn't move up so much, but they didn't correct also. But let's see, maybe the next 2 months could give such